Hey, what is going on? Welcome back to the channel. Today we're taking a look at Polygon Matic. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. So jumping into the daily chart, straight off the bat, I want to show you the Elliott wave theory that I have over here. So we have wave 1, wave 2 pullback, the monster wave 3, massive impulsive wave, wave 3, wave 4 pullback over here, and now we're starting the wave 5 towards $6.70. That is my technical target to the upside from this Fibonacci retracement, where I set it from the swing high in May to the swing low in July with a 1.618 sitting at $6.70. And I think we can be able to get there by the end of the year or by January, depends when we peak out in the market. Obviously, if you see Bitcoin and everything being super overextended, super overbought, and you're not quite there with the 1.618 on any sort of project, I would recommend taking profits because it's best to take profits and watch it go a bit up the project and then just fall down with everything else, or it can just fall down right after. Everything can just crash right after you sell, right? But you can potentially sell here, right? It goes up a bit, but then it has to crash and you can buy back in lower, right? That's the idea. And you can't perfectly time it, right? You can never do that. That's why you have to look at certain indicators and think for yourself, think about your financial goals. And I'm going to have a video on the blow off top for this crypto market when I will be taking profits for my altcoins, because I set up these 1.618 fib levels on all my projects. But if I see some red flags, and I see whales selling their Bitcoin, and by that point, obviously, the market would have crashed. But if I see them starting to sell their Bitcoin and I see all these indicators pointing towards us peaking out, I will sell my crypto regardless of us getting to the 1.618 or not. Because we can get to the 1.618 in a couple of weeks, right? And then we're going to have even more targets to the upside. So these are just targets. You have to understand that these are just targets. They're either met or not. If they're not met by the time I feel like the market is going to crash, and then it is what it is. I'm going to be taking profits regardless of the targets. I am in profit at that point, so it really doesn't matter. That's just a little rant for you guys to really give my thoughts on the bear market cycle peaks and tops. But like I said, $6.70 daily chart. You just made a bullish cross on Matic. You came back down to the 0.382. The last video I made on Matic was September 3rd, and you can check that out in the right top section of your screen right now. If you haven't done that, then go check it out and come back to this video. But as you can see on this fib, we are getting rejected by the 0.618, which is the golden ratio, right? And it does happen sometimes. It usually does happen because the golden ratio is a strong resistance level. It's the most important fib level of all. And you perhaps can come back down to the 0.5, have that test of support if the market indeed does roll over, right? If Bitcoin rolls over, the alts will roll over as well. So, dollar cost average, look at the 20 EMA on the daily chart, look at the 55 EMA on the daily chart, and just have buy orders at those prices. Okay, that's it for the daily chart. Let's jump into the RSI on the daily chart. So we're doing pretty okay. I'm going to have a little in-depth breakdown when we get to the Binance chart, but you can see that when you start coming up to this overbought level over here, that's when you tend to roll back down from there, right? That's the overbought above the 70 on the index. And when you get to that area, you usually come back down. So that's sort of a signal that you want to be looking at when you're thinking about taking profit. Now, jumping into the daily chart on Binance, I did give you this inverse head and shoulders pattern in my Discord server in the technical analysis section, which I do recommend you check out because I do sometimes give out these couple of trades that do pretty well, actually. So you can see that I gave this trade like maybe 2 weeks ago, and you can see that we got above the neckline and we have tested it as support, and now we're looking at that $1.85 for the technical target out of this inverse head and shoulders. I do have the fib set up over here from this swing high to the swing low. You have the technical target at $2.19 actually. That's your technical target. And I think we're gonna get there, right? But it's all about breaking this high. You want to break that high in order to get there, and you want to hold support for the EMAs, right? Because if you get too overextended from the 20 EMA, once you start coming back down for support, it's going to be nasty. Okay, so you can put some buy orders at the 20 EMA. You know, the market can roll over. Look at the 0.618 over here at $1.36. Have a buy order at those prices as well. Now, if we jump into the daily RSI, you can see that I have set up a couple of support lines over here. So these yellow circles indicate where a touch was made with the support line or the resistance line. Right now, all of these are support lines, but they have been tested as resistance previously and they have been tested as support previously. That's why they are very important for us, because you can look at the RSI, and if you look at this support line, for example, if you have a bounce off of that support line, that's where you want to put in some buy orders, because that is where you can potentially bounce back up. So you do something like this, come back down, you bounce from that level, and that's where you know you want to buy, no matter what the price is really. You know, if you see a bounce from that support level, you buy it. It can bounce up, right, and then fall back down. You can lose support. And you look at the lower support line. If you hold that as support, if you see a bounce, then just buy some Matic at that level, right? And you also do have this horizontal support line over here, and that can play as well. If we come back and do something like this and get to the overbought based off of this horizontal, that is something potentially that's on the play. But you have your three support levels. Draw them out. I'm just going to zoom in. This is the daily chart. Draw this out on your RSI so it's easier for you to follow. You can see that you have 1, 2, 3, 4 touches of the upper support, 1, 2, 3, 4 touches of the lower support, and the horizontal support has 3 touches as well. So that's really giving me a lot of nice entry points. The RSI, it's very good at that. Now we have a bullish cross over here on the MACD, which is great. We have a EMA squeeze in play right now, where the moving average, the yellow line, came close to crossing below the signal line, and the signal line is the red line, and it actually bounced off of that. It bounced off the signal line, and that's called an EMA squeeze, right? You bounce off and you see the appreciation in price. And the MACD essentially is a lagging indicator, so it only shows you after the price has done something, right? It only shows you the bearish cross or the bullish cross after you've been in an uptrend or a downtrend. So you look at it for confirmation, okay? Right now we are in an uptrend, right? So you have a confirmation of the uptrend, but you can see you have started coming back down for support on the price action, and yet on the MACD you still haven't had that move towards the downside. So that's why I recommend taking a look at it for confirmation purposes only, because you had this strong, like this is a single candle in a day, and that was a 32% move. And now you're coming back down for support, which is great. And you found this horizontal support line, which is the neckline of the inverse head and shoulders. Now, if you move into the stochastic RSI, you can see once you come up to this area, to this upper area over here, that's where you want to be taking profits, because that is the overbought. That is considered the overbought area on the stochastic RSI. As with many projects, you came back down. You didn't get this low. You didn't get to the oversold, right? You didn't get to this area below the 20 on the index. Rather, you stopped in the middle, had the bullish cross, and now you're reversing the trend to the upside and potentially coming back there once again. But you can stay overextended in the on the overbought over here for quite some time, maybe a week, maybe a bit more. That's when you see the move towards the downside. So once you see yourself in the overbought on the stochastic RSI, make sure to think about at least taking profits. Okay, so yeah, that's pretty much it for the For the Matic token, I think it's going to be doing great. Look for support on this horizontal support line. Look for the support on the golden ratio, $1.36, and the 20 MA are your best friends. We're looking at $1.85, we're looking at $2.19, and we're looking at $6.70 long term. Thank you for watching, guys. Make sure to check out the 2 videos on your screen right now. Make sure to check out the Telegram chat. A lot of great stuff is going on in there. People are constantly getting help from everyone in the chat, and in the Discord server we do have a lot of sections regarding NFTs, technical analysis. If you want any technical analysis, jump in there and type in something like, hey Hazeeq, can you give me a quick TA on VeChain or on Cardano, whatever it is, and I'll answer as soon as I can. And we have a news section in there as well. So it's just a great place for a great little community that we're building. Thank you for watching. I'm going to catch you in the next one. Goodbye and good night.